So as far as new supply is concerned, I think we've all felt it, seen it ourselves, experienced in our markets. Similar with housing, higher rates, higher construction costs, super complex environment we're in. We saw the craziness come out of the GFC, this huge boom in the storage, crazy amount of development going in throughout the country. Everyone had sub 4% debt. Life was good. And then you can start to see this huge fall off. We get that first rate hike in 22, and it has been impactful. We saw 275 bip hikes in 23, back to back within 30 days. And we have felt it ever since. And then last year was the lowest amount of supply delivered in the past decade. It was crazy how little storage was developed last year. So now with this, lower amount of supply, and we're going to start to see a lot of these markets play catch up and start to absorb all this product that was built in the late teens, early 2000s. So again, you can see this as development slowed, we're seeing this huge shift in the market. And on the right-hand side here, that completion rate, you see we were building 1,400, 1,200, 1,200, 1,100, 1,200. And then 24, that year to date was about 400. We finished around 500. I mean, it was half, if not a third of where we were in prior years. So all of that is great because it starts to see this retreat from the market, from developers. It puts operators in a better position. We're not seeing these huge, T12 rate declines anymore. We're seeing absorption. Because again, a lot of the markets that were really oversupplied were some of the hottest growth markets in the country. Your Charlottes, your Raleigh-Durhams, Tampa, Nashville, Miami, and all of those have now kind of started to plow through that with the amount of growth we're seeing in those markets. So again, it's a short-term supply issue, but it's still an issue, and it's going to take some markets longer to recover than others. There was a market in the Southeast in 21. I had a client building there. It was an $18 market when they started permitting. By the time they built and opened their doors, it was an $11 market. It's now rebounded to 15, 16, so it's coming back. But when you pro forma 18 plus and you open your doors, it's 11. That's a tough pill to swallow. And I know that there are a number of developers I've spoken with that have been in a similar vein. So again, not scared of these markets. It's more of just understanding the terminal value of the asset and the time it's going to take you to get there. I think the groups that are truly building the right reserves to stomach these environments are going to be the ones who really survive long term here.